Hello guys, I hope you're well. Welcome to another breakdown as I want to break down Boom 500 in this particular video. We did Crash 500, we did Step Index, we also did US 30, we did GBP USD. After this one, we're going to do the gold one. So just be focusing on those few pairs, just focusing on those ones, analyzing, making sure that you take trades as much as possible. So today, as I said, we are on Boom 500, right? So Boom 500, as you now know, as you all now know that we always start our analysis on a high time frame perspective. So most of you have just been exposed to retail knowledge. Retail knowledge is where someone will come and tell you, we're the trend line. We broke out of a major downtrend, right? Someone can come and draw a trend line like this. Broke out of major downtrend. Now when an uptrend. That is in as much as there are moments where it can actually be true. Then there are other moments where even after a trend line is broken, remember what I've always told you, that even after a trend line is broken, if a trend line is broken and no structure has changed, that trend line is as good as useless. But this one, you can actually see that it was effective, because even after it was broken here, they actually came all the way to change major character there. That was a major change of character that happened there. So the most important thing, according to our analogy, according to our way of looking at the markets, the most important first important thing, the most important first thing that you always look at and that you always want to master is proper identification of identification of structure. Once you're able to properly identify structure, when I mean structure, I'm referring to you. So this trend line, someone can come and draw the trend line. Personally, I don't need it because I can actually see what happened, right? But you can draw it just for formality's sake. Those that do want to draw trend lines, that like and that love drawing trend lines, but it's okay. So if you check boom, ever since this was 2021, right? This was in March 2021. I'm just looking on the daily so that you see how many of these major opportunities, major selling opportunities did it present to us throughout the entire time that you could have actually taken advantage of, and even the opportunity that you can actually take advantage of right now. So all these points that I'm marking, these are points, and these are the break-off structures that happened throughout the entire. So this is the swing lower low because it shifted inner structure, right? This is our swing lower high up there. So someone can mark them if you're a beginner, if you're still getting to understand this, which I call the overall way of looking at the market, whereby you consider institutional perspective as well as also the perspective of retail traders. So that's a swing lower high. This is a swing lower high. I'll just mark the swing lower highs. The lows, you see them by the break-off structures there. So that was our swing lower high. After this, our swing lower low was this one right here, right here, came. So every time you're seeing a break-off structure, to me that was an ending that was an end of actually a major selling move, right? That's on all these break-off structures ever since 2021. Ever since 2021, you would have actually maximized on them. So what could you have done? You simply start from the daily. Once you start from the daily like this, all you need to identify is structure. Once you identify structure and you identify your correct lower highs, swing lower lows, you know which particular swing point are we coming from. For example, here we're coming from a swing lower high. So there, after taking out or finishing this institutional move like this, for example, here someone could have also considered this fair value gap, right? Did it touch there? Okay, actually, they touched this other zone here. They actually touched the supply zone, actually, and not the fair value gap, which is also okay. They came tapped into the supply, didn't break above the supply zone, which was okay. The issue is once you've marked your zone, where there's a major supply, major fair value gap, once you've what you want to see is, even if the market comes into the zone, you want to see a shift of structure inside there. Once structure shifts, that's when you trigger your sell entries. So you would have triggered your sell entries just from there. Then after this major break of structure, that's a major full institutional move. This was a swing trade that you could have held from the 4th of June up until 27 June. That's almost like 3 weeks of holding. So it could have you could have actually made. So here, people who don't have much understanding, they can actually come and try to draw trend lines like this, right? But check this entry. These are late entries that. So I always say, and I'll keep on saying this, that if you meet up with someone whose understanding of the market is only retail based, that person is also similar to that person is also similar to 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 to, to someone who is using indicators, because the entries that you consider as perfect entries, because someone who's using a trend line can come and draw something like this, say, I would have sold here, right? But according to us now, men of understanding, I will tell you that that's actually a later entry. This thing started to sell all the way from above after changing character on a lower time frame here. After changing character there on a lower time frame, we could have actually triggered ourselves from there, targeting the swing lower low. So long we're still in a bearish order flow, we are always taking out the swing lower lows, meaning any entry confirmation that you get from the top. So yeah, this level gap, they didn't touch it, they actually touched the other one below. So I always tell the guys that are in my class that it's not all about drawing zones. In as much as you can draw zones, your favorite gaps, your order blocks, your order, it's not entirely about the zone. It's the reaction of the market in the zone. So the market, once it taps into your zone, if ever that zone is going to hold, we have to see a shift. We have to see a shift. Once we see a shift, then we trigger our entries. So after tapping into a fair value gap like that, right? That's the first point. That's the first starting point. This was in 2021. Let me see if 4 hour can actually give us 2021 chart as far as September there. Let me see if the 4 hour can go as far as there. If it can go, I can actually show you where the shift happened and where you could have actually triggered your entry. Unfortunately, this one, it's not going as far as there. Let me see 8 hour. Let me see 8 hour if it's going as far as September 2021. When was this? November 2022. This was July. It's not giving me, but basically what I wanted to show you, was that where's this? Right. So basically, what I wanted to show you was how you could have entered the trade, obviously with the lower time frame confirmation. The lower time frames, I simply use them for an entry confirmation. Then the higher time frames, I use them for marking out my major zones, identifying my major structure, where are we coming from according to our major structure. Because if you don't know where we are coming from according to major structure, it means the actions that you're going to perform on a lower time frame perspective are going to be actions that are going to last as far as that lower time frame is concerned. So that's also the other gist or the other trick when it comes to time frames. So time frames, you need to be so careful. So higher time frame. So this is the daily, as I said. So after tapping into that zone, all you needed on your 1 hour time frames was a shift in order flow. Because remember, as they will be going up like this, they will be going up in form of bullish order flow, right? So the minute they change order flow, or they change order flow on that time frame, because here on the daily you can't see it because the candles are few. The candles are few. You can't see that entire movement because one candle, yes, it's a day. So if you're looking at a 1 hour perspective, this one daily candle is 24 candles. So those 24 candles are so clear that they can even show you what entirely happened there, the change that actually happened there. Once you see that change, you actually enter your sell upon the pullback. They change character, they come back to mitigate. Those are just the simple confirmation that you need. But the simple change that you want to see is just a shift in order flow. Once order flow shifts, you know that indeed we have now established our new swing leg. Once we've established our new swing leg, which in this case it was our swing lower high, you enter your sell. Your target is the previous swing lower low. That's your first target. Then the second target is maybe after uh creating a new swing leg. So this one is the first basic. So all these opportunities were opportunities that you could have actually harnessed and taken advantage of on Boom 500 ever since 2021. Opportunities that you could have actually made money from. especially all these major cells. Even these buys, the same way you are entering the cells is the same way you also enter those buys. In this case, came, established this law. After establishing this law, did an inner shift. After they did an inner shift, all you just be doing now is following order flow. So, same thing here, right? Same thing here. They mitigated, they mitigated, they mitigated. The only unmitigated supply was this one. Okay, that was the first zone that you'd have drawn. Where is another zone that you can actually draw? I can see a huge fair value gap here. So already I had two major zones up there that you could have anticipated this buy to push to, right? After tapping into your first major zone or your second major zone, all you need is a shift of inner structure. Once that inner structure shifts, then here you can actually see on the daily, it's actually even more clear. It's actually the shift here is actually more clear. It's so visible, so visible. This was the shift of order flow. After they shifted, they actually came back. They didn't come to the supply because it was mitigated already. They came actually to the fair value gap, which is where you could have actually triggered your sales. I'm simply showing you on the daily because it's not permitting me, it's not opening other candles or other ranges there when I go lower. But basically, this was the sell there. So even after breaking structure, so every time after they break major structure, that's when they give you that pullback to establish a new leg. So it means before they even break structure, you are focusing up until they take out your break structure. Here they came to actually the swing. That one is a simple. This one is a simple one because that was the last unmitigated supply, which was just by tapping into the zone you would have entered or simply waited for the inner shift. Once the inner shift happens, you enter your cells. You are targeting the like this. So I'm not talking about the counter trades by the buys, but I said there is a way to enter the buys. The same way you're entering the sells is the same way you also enter the buys. I'm just focusing on where the order flow was going on a higher time frame perspective for the sake of time. So even here, this was also a clear, even the counter here, the counter was also clear to the upside because they actually came and mitigated. They changed inner order flow, establishing that leg as a swing leg. Then they came back to mitigate unmitigated levels. After mitigating unmitigated levels, you would have entered your buy. Entering your buy there, where is your TP? That's the next important point. So from here, you can target this first, which this can be a short-term first target, right? This one, which was also a swing trade to there. So after breaking that inner structure, you can see they actually came back again to mitigate or to tap into this zone, which was also fine. Coming back, then you could have bought again, bought again. So the first target, you could have targeted this one. Second target, you could have targeted this, like this. So first entry, you could have entered here, targeted here. Second entry, you could have entered there again as it came back, targeting here. So it came, dropped again, which was also fine. By the time it came back to come back again, obviously you would have made profit or you could have logged profits or would have closed some profits, whichever way you would have done it, but there was no way you were going to encounter a loss in that particular. So these are two entries that you could have entered opposing the flow. So they never came back to some of the levels up there. You could have drawn levels like this, whether it's a fair value gap or the order block up there. They never came there. It's not a problem by them not coming there. Someone might think maybe is it an error? It's not an error. Them leaving out those supply zones or those, they can actually come and tap them even in the near future. If you stretch this supply that they didn't touch there, if you stretch it, you realize that in the future they actually came back, actually came and touched it. This is where actually they are giving us that reversal, which is not a problem. Remember what I said. The most important thing is the shift of inner structure. Once inner structure changes on 1 hour, they're on your lower time frames. That's when you know that a new swing leg has been created. Once they've created a new swing leg, this is your swing lower high. This being your swing lower high, you know that once it's established, we're now going down to take out the low like that. So let me try to go to the 4 hour so that I show you how some of these entries or how some of these techniques are actually achievable so easily. so easily. Once this understanding has been established, I'll just give you one example so that you see that the same way I'll illustrate on that one example. It's the same way. So here, what do I mean by a shift in order flow? Remember, as they will be going up from here, from down here, as they'll be going up from down here, they are going up in form of bullish order flow, right? So in that form of bullish order flow, like here, they did the inner change of character, came, mitigated, came. So as they were going up, they're actually going up in form of what? In form of bullish order flow, like this: low, high, low, high, low. Then right here they established a change of character. That change of character, this one was the one that was where the shift. That's the shift that I'm talking about. Someone can come and draw a trend line like this, right? In as much as the trend line was broken, there's nothing wrong with that. But let's look at the structure. The most important thing is the structure, because a trend line person can actually sell based on the breakout of the trend line, but they may not be aware of most of these information that we're now giving out, whereby if the structure doesn't change there, this trend line was as good as nothing. That's why you see they come, they bounce, then they continue going up. So after doing that, they left an unmitigated supply there, which was where you could have entered. This is the entry that I'm talking about. Obviously, you can go down lower, 1 hour, 30 minutes for a smaller stop loss. You can go lower for a smaller stop loss if you want. But that was the entry there. If you notice, the risk compared to the reward is so huge. So huge. Yes, actually 1:17. If you go to 1 hour, it will be actually greater than that. Maybe close to 1:20, 1:30, depending on the sniper entries that you would have ended on that smaller time frame. So notice that my analysis it is happening on a larger, higher time frame perspective. All I'm doing when I come lower is identifying a shift, something like this. So in this case, where could I have entered my initial buys? Personally, I could have used this first inner shift, this first inner change, right? This change, I could have used it for my buys. Where could I have bought? I could have simply waited for a pullback into, for example, here they'd mitigated this. So there was no need for them to come back there if they're there to that demand, like here. So that's where also I involve my Fibonacci. If you see my Fibonacci, they came close to 78.6, which is also okay. Not a problem, not an issue. So here, this leg, we actually consider it as a hidden order block, this one, which was where you could have also entered. Same thing, even after tapping into that zone, if you go to lower time frames, like your 15-minute, you realize that as it was coming down, it was coming down in form of bearish order flow. Once you see the shift, that's when you enter. You enter, your target is previously there, right? That's where your first target could have been, just flowing like that, following structure, following order flow. You could have actually harnessed quite a lot of these opportunities. So entering here, entering there, all of these opportunities that you could have actually taken advantage of, is it was going to the upside. Same thing with that one that after this break came back down to mitigate the right here, came into this zone. You would have actually minimized your stop loss as well. Entry there, stop loss there, making a big risk to reward ratio. So I'm just ending here on the 4 hour, just for formality and for the sake of time, but you can even go to a lower time frame to minimize the stop loss if you want, but this is entirely what will be happening on the movements that will be there on the market. So here, even here, you can see they actually came into this one, just where you could have also done this, target up there like this. So all these were opportunities that you could have taken advantage of. So where the shift happened, what do I mean by shift? The shift, this is where by structure, because remember this inner structure, as they will be respecting that inner structure like this. That's their low, that's their high, that's their high as well. This one, did they break there? They failed to break up there, which was the first sign of reversal. Their failure to take out this high, first sign of reversal. You could have entered there, firstly, which was a risky one, right? So even here, inside here, you can actually see that this was a high. Yeah, this was a high. This was a high because it took out this inner. Then this was a low because it took out the high. Then they came, they changed character here. After changing this character, this leg that changed character, that's our swing level, this one. So as much as they came back, even if they come back there 10 times, you will be entering 10 times. Meaning the first time here, you would have sold. The second time, you would have sold. Third time, you would have sold. Because according to law, once we have established that swing leg, we now must go all the way to the next swing leg, which is this one. So those cells there, you could have actually held all the way. This was in 2022, last year, November. Last year, November 2022, you could have held the trade from 19 November to almost, that was a month. Imagine a month of the market flowing in one particular direction. A month of the market flowing in one particular direction. So I'm coming all the way to even where the market is right now. So even here inside structure, you could have even followed inside structure. So long inside structure doesn't change, you can still hold on to your cells. So the most important thing is identification of structure. That was a low, that's a high. We broke structure, that's a low, that's a high. We broke structure. We follow, we follow, we follow, we follow. We follow, we zoom in. If you can't see properly, you can zoom in as much as you want, like this. There was a break there. Here, there was a slight break there, like that. Here, in a break, like that. Then eventually they took out the, so there, that's where the change happened. Meaning that was now a new swing leg, which is a swing lower low. Once you have a swing lower low, the market will go up. So you see on the 4 hour, the candles are so many. That's why I was just focusing on the daily. So once we now have this, we're still targeting the market to go up, maybe around above the premium zone there, above the 50% Fibonacci. So all you can be doing this entire time from here up until wherever it wants to go, you can simply be following structure and entering based on that structure, right? So looking at structure, looking and following structure. After the change of character, they came back to mitigate. Here they'd mitigated already, so they didn't have to even come and touch there. So after this change, they came the first time. This was the new higher high. We're now following internal structure. They came, didn't touch the zone, went up, failed to break the high. So this failure to take out this high, they are simply telling you that there is a zone that we are still yet to tap. Had they taken out this high, it means this is now your higher low. But that's not our higher low because they didn't break out this. So if they didn't break out this, they can even still come and collect any other liquidity that might be there. In this case, this was all equal lows liquidity. They come wiped. So these are sniper entries that I usually love so much. This was your first entry right here. You would have entered your buy, stop loss here. First TP, you would have put it right here. That was a swing trade as well. After the break of structure, they do the same thing. You just follow structure. So this, what you can do, you can even say, this is now my external structure, just for the sake of following this, of trading this opportunity that is here. You can forget about the overall external and focus on the inner, like this. So you can say, this is my external, this is now my inner. Whichever way you want to use it, so long you understand what you're doing. So this inner, where the inner changed, where that inner changed, that's your our new high is going to be where the inner changed. Where the inner changed after the break of structure. After the break of structure there, this was the low, that was the higher low, higher low, higher low. This was the previous higher low. Where the previous higher low was taken out. That's your higher high, swing higher high. Once you have a swing higher high, you can actually mark that level as your TP for the buys that you enter after obviously confirmation as well. So even these pullbacks into, so yeah, they'd mitigated. They'd mitigated almost the majority of the levels right here. So all you do, you can mark the mitigated. You can mark the mitigated like that. But remember what I told you, the gist is not about the levels, but actually the behavior of the market as it comes into the zone. So let me go to April 2023 on a lower time frame so that you see that lower time frames basically they are so good when it comes to them giving you entry confirmations. Entry confirmations, they are so good when you get them there. So most of you, the mistake that I see people always making is where they start their analysis actually from the lower time frame instead of starting their analysis on a higher time frame perspective. They actually start their analysis on a lower time frame. Once they start the analysis on a lower time frame, they don't have the overall picture of why am I buying here? If I'm buying here, why am I buying? What's the higher time frame backup of that buy that I'm taking, right? So most people they're not well educated in terms of that now. So let me just zoom out. Just want to go to April, so that you see that even if I go down to a 1 hour perspective or a 1 hour time frame, all I need is just an entry confirmation there, but not entirely the analysis. The entire analysis, my entire analysis or my major analysis, I would have done it already on my daily, on my H4. I would have done my entire structures, my entire setups already there. So that's so let me go back to 4 hour. The 1 hour is not giving me those candles that I want. It's not giving me those candles that I want that are there on. It's not showing me what I want to see. But basically, this understanding is an understanding that once you have it, once you have it, once you have it, no one can take it away from you. And also you can't be manipulated anymore. All these manipulations, funny manipulations, whereby your trend line traders, they are being manipulated each and every single day, whereby so, someone will come and draw a trend line like this for you. Guys, we're now selling because the market broke structure. Broke structure where there was no break of structure there. No structure broke here. No structure broke. Someone can come and say we are now in a downtrend because we broke out of this trend line. My brother, what are you talking about? Even this one, even this one. You see, all of these trend line breaks. I'm showing you all the manipulations that were happening to trend line traders throughout this entire move going up. All these manipulations, whereby the trend line is broken. After it's broken, they, it's just a roller coaster of manipulation after manipulation. So you see, they broke. Someone could have sold, then they're wiped. They sold, they wiped, they manipulated there. So you see now the danger. That's why you see most of you, they've taught you and taught you trend lines after trend lines after trend lines. But still you're still experiencing hardship in terms of uh realizing consistent profits. It's because that's not trend lines are not the real structure. They try to give you a direction. They try trend lines that it's when I'm comparing trend line knowledge or normal retail price action knowledge with institutional knowledge, I can simply say institutional knowledge is the one that is ahead, and uh, the the retail normal price action is simply uh it's simply lagging behind because they're trying to define they try to the same way indicators try to give you a rough picture of what is happening. It's the same way in which the normal price action tries also to define structure or define where the market is coming from or going. But that's not as accurate. The most accurate information or the most accurate bias that you can ever use is using market structure knowledge from an institutional perspective, as raw as it is. When you look at the market structure as raw as it is, so here you can see that they were now flowing in bullish order flow. Up until you can see they kept on going in bullish order flow. So all these zones that I'm marking, these are zones that you could have simply gone down to a lower time frame, 15-minute time frame. If you go down to 15-minute time frame, you realize that they actually did a shift there. Then you would have targeted the previous high there as your target. So all these breaks, all these circles that I'm showing you, those are opportunities for. So all these were opportunities. That was an opportunity to buy. You would have simply gone down to a 15-minute or 30-minute time frame, got in the shift. Once you see the shift, you have taken your buy. So you see other swings are shorter than others. It's not a problem. It's not a problem. It's not a problem. So long you now have understanding of what's going on. It's not even a problem how short or how long the swing is. So this one longer than the other one. So they kept on doing that. Higher high there. Where is our higher low? See? They were entirely bullish, following bullish order flow, bullish order flow, bullish order flow up until they, because remember, our major change of character is here, this one. That's the major change of character on a higher time frame. Or so that one, it means overall, externally, we're now going up. But that going up externally, it doesn't mean that we're never going to have pullbacks. Pullbacks are always going to be part of the game because they push, pull back, push, pull back, push, pull back. That's simple basic knowledge. So here internally, you can actually see they also did a change there. We would have also harnessed upon the coming back there. You'd have also taken your buys targeting there. So all of these were opportunities that were being presented to you. You realize that most of the setups that I'm giving you are the setups that were in line with order flow. Once you enter trades that are in line with the current order flow, rarely will you find yourself in drawdown or in any form of so yeah, they did the inner shift. Where is our first zone? Is this one? Other zones are down there. Remember, the aim is not about the zone, but how the market responds to the zone. So after doing this inner shift, they came back here. You would have taken your sales there, counter, which is fine, not a problem. Not a problem taking counters so long you know what you're doing. So there you could have bought nicely targeted there. So you discover that they kept on respecting bullish order flow up until they eventually changed major character up there here. So this change of major character, you're supposed to go to the daily now and now look at what the market is trying to do now, because after changing that major character, that's a major move that the market would have done. So after finishing a major move like that, after finishing a major move like that, um, after finishing a major move like that, you always need to know, 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 you always need to know what is the next major move that is following the current one that we are in, right? Let me just go down here. So once you have this understanding, you will realize that higher time frames, you must make sure that you have a solid understanding of the structures and the analysis there. Once you have an understanding of the structure and the analysis there on a higher time frame perspective, even when you come down to a lower time frame, any action that you're going to perform there, make sure you're performing it in alignment with what the higher time frame is doing. So just a real quick, so that for the sake of time, we don't waste much time going back to history and let's come to where the market almost is right now. After that major change of character, let's come to let me just play around there on 4 hour. Let me just play there on 4 hour. And this review is going to go to the daily. Let me play there on 4 hour. On 4 hour structure, let's flow there. 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 On 4 hours. So after the major change of character, remember that's a full move, right? This is our swing leg, swing lower low. That was our swing lower high. After breaking the swing lower high, you always want to see an establishment of a swing higher high. How do you know that a swing higher high has been established? By the shift of this order flow that was happening, bullish, 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 bullish. This bullish order flow that was happening this entire time, right? Once you see them changing that bullish order flow like this was all bullish order flow up until they change character there. Once you see them changing that bullish order flow, once you see them changing that bullish order flow, you always need to know that they are now, they've established their swing leg. So here they came, changed the first time, came back here. So they just played a little manipulation, but basically, you see, that's where they drop. How do you know that that was a little manipulation? When you see that after taking out the high like this, they came back inside, corrected, then they eventually. So this was our swing, higher high because it's higher than this, right? Dropped in form of bearish order flow. You could have actually harnessed these cells, these major pullback cells. You could have taken advantage of them. They also flew, they were also coming down in form of bearish order flow. If ever you can go down to 1 hour, you can actually see the flow of that bearish order flow coming to the downside, coming down here. You can actually see the bearish order flow nicely. So that's a major break of structure. After the major break of structure, the same thing, you anticipate a major pullback. So it's always major change of character, major pullback, major break of structure, major pullback. Even if the pullback comes around here, it's still fine. Would have taken advantage of those cells coming down there. So right now, we are currently up there. We're currently up there. Let me see if I can go down to 1 hour. Is it going to permit me? Is it going to permit me? Right, this is 1 hour. Wonderful, beautiful, beautiful, beautiful. So as I was saying, that here after this change here, which is also what I call institutional manipulation. This one is higher understanding now. This institutional manipulation whereby down here they'd done the change, right? They'd done the change, but then they came back up to the zone, which was this one. After they came back into the zone, they kept on. So as they were coming into the zone, they were coming in form of this is now the confirmation that I'm saying. That is lower time frame confirmation that we must just wait for before jumping into the entry or before jumping into the trade. You would have waited for something like a shift before jumping into the trade, something like a shift. Where did the shift happen? Right. Where did the shift? Where did the shift happen? You zoom in like this. When you zoom in like that, you realize that where the shift happened, they actually did shift right here. That's where the shift happened. So after this, you would have actually started to look for your cells. For example, your first zone was this one. Let me mark this order block, this black order block. This black order block right here, or also this fair value gap here. It was also on the same zone with the fair value gap. Fair value gap and the order block were in the same zone there. Like this. That was your first zone. Other zones you could have drawn this or that one. No problem. Remember what I said. It's not about the zone, but the reaction or the response of price in the zone. So once you have drawn a zone on 1 hour like that, all you need to do on 15 minutes, you just need to see an inner shift because once they change character like this, them going up like this on a 15-minute, they actually go up in form of bullish order flow. So that shift there, it's the one that would have confirmed to say now we are entering. So even they coming down, they come down in form of bearish order flow. It's a major pullback, yes, we know, but they come down also in form of what? Bearish order flow. They broke structure there. Another entry you could have caught was on this one. Supply. From the supply, they could have held all the way from the to the low. So they're flowing now. They could have entered, they could have entered. So even the holding would have actually held as far as so long they don't do any shift. you can actually follow. There they broke. After this break, they pulled back, kept on going, 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 kept on going. You see? They kept on going, kept on going. Some of these swings are very, very small, which takes someone with understanding to properly see them. Kept on going, kept on going, kept on going, kept on going. That was a break. So you would have followed structure, followed structure, followed structure, and followed structure up until where the structure changed. Up until where the structure changed. That was a break again. After the break, they came again. So all these opportunities were opportunities that were being presented to you in that going down. But remember, this going down is simply a pullback according to the understanding that we have seen on our higher time frame there. From there, from this supply, you would have taken your sales there, targeted this low, like that. After that, this is where the change started. Once you see that order flow, we're flowing in bearish order flow nicely. Once you see the order flow changing now like this, it means we have now established our swing leg. This is now our swing higher low because it's higher than the previous swing low. Where is the previous swing low? Zoom out like this. That's where you zoom out. It's there down there, right? So once you now have a swing higher low, remember we're now overrunning a bullish. So meaning, if we're going to get any opportunity from down here, this is where the gist is. You can hold it as far as to this. That's maximizing now. Because we are in a bullish order flow now externally also. Externally, we were bullish, and also internally, we're now bullish. We became bullish here. This is where the gist about this entire strategy is. Most trend lines people, most normal price action people, they will never tell you what I'm telling you now. They came down here, the fair value gap. You could have marked both the fair value gap and the order block, which is not a problem. You could have even started entering there, put your stop loss below this zone. After this, so long, we now have this change of character here. Now means our internal order flow has changed, right? We now have, what do we now have? We now have a new high, number one, because it did the inner shift. Change of character, you expect a pullback. Once the pullback happens, you enter. You would have entered your buy here. This buy that you enter here, having knowledge of what is happening on a higher time frame perspective, which is why it's very important. This trade that you entered there, which was the first major confirmed buy, you could have even held it all the way to that swing level there before any swing pullback happens. You know that swing pullbacks, they will always happen after they take out this swing leg. So that's where they'll encounter any swing pullback like that. So that was the first major entry. Then I want us to follow structure inside. Once you follow structure inside, you realize that there were so many other opportunities that were inside there. This one is the first major one. Let's follow structure. We broke structure there. After we broke structure, we can draw our zones, unmitigated zones. If we have them, we can draw them. That was an unmitigated demand. You could have also bought there, stop loss below it. Your target is the previous leg that created that demand, like there, like this, right? You could have also held it up to here or even all the way up. So you're now just following order flow, order flow. This was a higher high. That's a higher low. Follow order flow where they're going to change inside, where they're going to change inside. Right here, they changed. After they changed like that, that is now your higher high. This is your higher low. They did a break. After the break, they came back. So yeah, they actually presented this opportunity. After this break, you're expecting them not to take out this, so long they haven't gone all the way up there to the swing leg up there. So right here, you would have drawn your first zone as the demand there. Another one right here. They tapped into this one. You would have gotten confirmation on a 15-minute because right now on 1 hour, you would have taken other buys there. First target could have been this because it's a small swing. Higher high there, higher low. Right here, they gave you an opportunity on a demand zone, which actually was a bigger and a longer swing than the others. So entering here, so you realize that they will follow. What you'll be doing this entire time is just following internal bullish order flow. internal bullish once up until they take out their swing leg up there. So if you follow structure, following structure properly, let me delete this. So structure is the real gist. You realize that structure is the real gist. Structure is the real gist. Structure is the real gist. Higher high, higher low. This was your target. Here you can actually see we have a mini fair value gap. It tapped into the zone, 15-minute confirmation. You enter, we call target here. Where's our higher high? Higher high there. This was a target. That's a higher low. Where is our higher high? Our higher high is there because this is one leg. If you notice, ta, 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 ta. This was the break. So right here, you could have drawn this demand. First zone. Another zone, you could have also drawn this other demand right here. This one was also effective because liquidity had been collected. So all you needed was 15-minute confirmation. Tap into the zone, 15-minute confirmation, you jump in. Target is there. Kept on going up, 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 up. Higher high, did the inner shift. That's a higher low. They tapped into the fair value gap. Got in 15-minute confirmation, you enter. Up until they took out the swing leg, which is up there. They came higher high. This was a higher high. Did the inner, let's say, higher low. Broke structure there. So they've taken out the swing leg, which is a major break of structure. Remember, after the major break of structure, we anticipate a major pullback. The same way here, after the major change of character, which was here, we expected a major pullback, which was this one. Same year, expect a major pullback, even if it's going to be to the 50% level or 50% range, even if it comes deep, whichever way, but we anticipate a pullback. We anticipate a pullback before a major continuation. So now, your opportunity, you realize that where the change, after the major break of structure, all you now need, we are now anticipating a change of order flow. We are still flowing in bullish order flow. After breaking that structure, that's a higher high because it did the inner change there. They took it out. This is a higher low. Once that higher low was taken out, that's the change of character now. It's the same change of character that is sold downwards that facilitated the buys. This one, the first one, which is this one. This one. Change of character, they came back, then they went up. The same change of character that you're seeing upward here. The change character, which is here, you'll see them doing what? Coming back, then going down like this. So up there, all you need is to draw zones of significance. Once you draw those zones of significance, you can target this as your first target, coming down like this. So up there, you can see this one was mitigated. We can also see, was it mitigated? Yeah, it was. We have also this one unmitigated. You can draw that. So all those unmitigated levels, they usually love them. This one is close to this one, they will prefer that one. Someone can also come and draw a fair value gap here, which is not a problem. So basically, those will be your major zones that you're anticipating them to pull back into. But basically, personally, I'm anticipating up there because that's a more premium zone and there's an unmitigated supply that is there. There's also some liquidity that is there. So basically, I'm anticipating them to shoot all the way to the upside like this. So before they shoot to the upside, you can actually see that right here, they did something like a change, a mini change of, so this change, it means we now have a lower low because it's lower than this. Once we now have a lower low, market must go up and create a lower high like this. So this being our lower low, it means we're now anticipating a push to the upside. That push to the upside, you can see that here we have a demand. With a demand, they tapped it with also another demand that is here. So basically, you're anticipating something like a touch into these zones before, something like this. You're looking forward to something like this. Up there, you will sell nicely from there. We're also going to give that signal both in our VIP groups. We're going to give that sell that swing sale on Boom 500. Very beautiful opportunity that you could have actually harnessed and taken out that you can actually harness and take advantage of. So this is a counter buy that you can also take. You can also take it, but the main entry or the main trade that I want you to take is up there. So guys, thank you for watching. See you in the next video. We are going to break down gold and show you main opportunity that you have harnessed on gold and also the current opportunity that we are wanting to enter. Gold, just a rough hint, we are currently anticipating swing sales basically this week. Our entire focus is on swing sales. You'll see in the next video that we're going to do about gold. You'll see why I'm anticipating swing sales. So guys, see you in the next video.